This episode, number 221 of the Lend Academy podcast, was recorded at Lend It Fintech Europe 2019. It was recorded live on stage, and there is also an accompanying video, but we have what follows the audio from that conversation. Okay, welcome everybody. We are here for a special Lend It Fintech Europe 2019 edition of the Lend Academy podcast. And it's my pleasure to welcome Martins Sulte from Mintos here to the show. Maybe we can get started, Martins, why don't you just give us a little bit of background about yourself and what you've done so far in your career?
Sure. So I'm originally from Latvia. Basically, my previous career before Mintos was mostly, if not everything was related to finance. So I spent my time in investment banking for a good 6 years. Then after investment banking, I actually decided to pursue my MBA and did MBA at INSEAD in Singapore and in Paris. They have two campuses. And then after INSEAD, basically decided to take a plunge in entrepreneurship and start Mintos. That's very short.
Okay, so you went straight from university for your master's, right? And then straight into starting this company?
Straight after MBA, yeah. So okay. Straight after MBA. So, and then before MBA, basically when I was looking for a loan to finance my studies, was my first exposure to P2P.
Right.
I actually got the student loan from Prodigy Finance to actually fund my studies at INSEAD. So there was some connection also already before INSEAD to the P2P concept.
Right, interesting. So you came at it from the borrower side originally. So then what was the idea, and were you looking to start something in financial services, or what was the idea that really led to Mintos?
I think I was looking after INSEAD, so basically I was looking after MBA, after my master's, I was looking what to do next, and I knew already before INSEAD that I want to take a plunge in entrepreneurship, and then after INSEAD I was just looking where I could add the most value and what kind of interests me, and then just combine the two things. So I had my background in finance, so I spent time in investment banking, did the CFA, studied undergrad in business and economics, a lot of kind of finance background, and then just my kind of love for tech. So I'm not technical, cannot really write a code, but I've been always passionate about technology. And then I think after INSEAD just was looking at the space, what's happening in the financial technologies and in financial services, and that coincided with the advent of peer-to-peer lending at that time, which is early 2014. Then was still remember coming actually to the first Lend It in 2014 in Europe.
Right.
And then there's also, of course, other players kind of scaling up. And was just looking at the space. And I think what made me kind of thinking is the whole concept of having a very many different platforms, each of them kind of originating different loans. And then as an investor, if I want to invest, I have to go to each and every platform to get kind of exposure to this asset class. And that kind of didn't make sense to me. I thought there should be a better way actually. And that's how the idea about Mintos came about. As a marketplace for investments of loans, where there are many different loan originators. And as an investor, I can come to one marketplace and find a lot of different loans from many different loan originators.
Right. So then, your platform has become a bit of a phenomenon, I would say, in Europe, where you are now originating. I've been following your history and just seeing how eventually you started to keep growing. It seems like it's taken off like a rocket ship. You're doing more loans than Zopa and Funding Circle combined, sort of thing. So tell us, maybe we can start back. I'm curious to maybe get a sense, because you're based in Latvia, right? So then what is it? I'm curious about what the environment is like in Latvia, and do you have all your developers there? Is your whole team there? Do you have other offices? Tell us a little bit about that.
Sure. So basically, Latvia is how you should look at that is Latvia is where we are based out of. So most of the team sits in Latvia, and we have offices in Berlin, in Warsaw, and in Vilnius in addition to Latvia, but still most of the people sit in Latvia. But business-wise, like 95% of the business we do outside of Latvia.
Right.
And that's basically when I was looking to set up the company, so we had a clear choice, either to start in London or start in Latvia. But at that moment, it definitely felt, and I think it was at the end of the day a very good decision to start in Latvia because I had all the kind of network, available kind of capital there, and just seemed easier to start out of Latvia. And today is definitely like a competitive advantage for us that we are based out of Latvia because the cost base for us is rather low, but the value which we can build is the same what you can build from the Western Europe.
Right, and it's part of the Eurozone, right? So
it's part of the Eurozone, so it's basically it doesn't matter like these days where you start from. And from day one, it was global ambition. So my ambition was always either we're going to build a global marketplace, or then we just don't do anything.
Right. So then maybe let us know, like, because I know that you aren't just focused even on Europe today. You're focused, and I saw an announcement, I think, yesterday that you're starting out in Kenya, I think it was, and I know you've got Mexican platforms. So how many platforms do you have, and how many countries does that come from?
Yeah, maybe I'm just gonna step back a bit and explain how we actually operate. So
basically,
sure, at the marketplace, it's a two-sided marketplace. So on one side we have a loan supply, and the loan supply is brought to the marketplace by loan originators. Those are separate companies. Like today we focus on alternative lending companies. All of them are balance sheet lenders or used to be balance sheet lenders, and they are using the Mintos marketplace basically to sell the loans they originate. So that's the loan supply side of the marketplace. And the other side of the marketplace is investors. And on that side, we do have retail investors who are then coming to the marketplace and buying the loan parts of the loans which are originated by different lending companies. What it means, we as Mintos, we don't touch the borrowers. So we never see the borrowers, so we don't do the credit scoring of the borrowers, so that's done by the loan originator. If you look at the loan originators, or we call them also lending companies, so today we have 67 different lending companies from 31 different countries.
Right.
And that's what we, I think, bring to the table for any investor is like unmatched supply of loans. So investors can invest in different loan types, from consumer loan to business loan, invoice financing, agricultural loan, car loan, you name it. It's different countries, so today we have 31 different countries, anything from what you mentioned like Kenya, South Africa, Zambia, Botswana in Africa, to Colombia, Mexico and Latin America, and then Vietnam, Indonesia, and Philippines in Southeast Asia, and then everything in between. In Europe, a lot of countries, and then also Central Asia, like Kazakhstan and Armenia and those countries as well.
So then, given that that's such a broad spectrum of countries, how do you vet these companies? Because I imagine, like anything, there's going to be well-established players who are very trustworthy, and there'll be others that are newer, and it's harder to know whether they're trustworthy. So what sort of process do you go through to allow like a lending originator on your platform?
So basically, they're going to go through the due diligence process with us, and obviously there's like different loan originators on our marketplace. There are players which have been around since actually 1999. They've been lending as a balance sheet lender for like 20 plus years, right? And then there are players which are now just popping up, especially like in Southeast Asia, there's a lot of activity, which are just entering the market. Irrespective of how much experience they have, the process is the same. So what we're going to look at is first and foremost, of course, is the loan performance. So we have to see that the loans are performing, that they understand how to originate like quality asset. That's going to involve looking at the cohorts, like track record, what they have, having minimum portfolios of loan book and so forth. So there's already some threshold there. Then we're going to go and do checks on management. For sure, we're going to do checks on the position in the market. We're going to check regulatory environment, like a whole bunch of things basically before we are comfortable to connect the loan originator to our marketplace. And that ends up that we usually going to connect only the top players in the respective market to Mintos marketplace. So depending on the market, it's going to be either among the top 5 players, among the top 10, maybe top 20 players, depends how big the market it is, and those loan originators are the ones which we are working with today.
So do your people actually physically go and visit these originators in their offices in every instance?
Yeah, for sure. So basically we have the whole sales team, so that's the first contact. So we travel a lot, so to all the countries. Then we have a risk team, separate risk team, which is the only thing what they do is like vetting all the loan originators and then following and monitoring them. And then of course, like visiting them is just one part of kind of due diligence what we do. And like now, when we are already established player, we also can do a lot of reference checks in the market. So if we know the market, so for instance, now we launched Kenya, it's actually another loan originator in Kenya. So we had already before, so we can ask the market players as well, like any reference about the player. So there's a lot of things which go in before we connect the loan originator to Mintos.
Right. So then once an originator joins your platform, and obviously they will have a very good insight, a real-time insight into how they're doing. I mean, have you had instances where an originator's come onto your platform, have not performed like you would expect, and then you kick them off? Does that happen? So what is what are the parameters there? What would cause that?
Yeah, so it's those cases. So first of all, it's been actually there's only very few of the loan originators which would want to be on the marketplace we accept.
Right.
So in total, we today have a relationship with around like 1,000 loan originators across the globe. Of those, we have connected only 70, right?
Right.
So there's like plenty of those which maybe still in the process. There's plenty of those which we have sort of refused, and there's like a lot of players out there in alternative lending space. Of those which have connected to Mintos and which either themselves have decided to stop using Mintos, or we have kind of mutually decided on that. The reasons usually is that they are kind of too small, or the loan performance is not up to the kind of quality which we would want to see them originate.
Right. Okay. So it's super fascinating, I think. And I should full disclosure. I signed up for an account at Mintos just a couple of weeks ago, and I transferred in $2,500 transferred it into euros, so I could invest across the eurozone. And I noticed that you grade every loan, or not every loan, but there's a lot of loans that are graded, like you grade. And so does that mean you're adding your own underwriting, or what goes into that loan grade?
So the loan grading and credit scoring is done by the loan originator. So each loan originator has their own approach how they actually look at the credit scoring and underwriting.
Right.
And if they have a loan grade, then those are shown on the marketplace on Mintos. So we don't go into this each and every borrower. So in total, investors have funded so far 3.5 billion euros worth of loans, and it's if you translate the number of loans, it's 16 million loans.
16 million loans.
6 million loans.
Wow.
Some of them, of course, are very small. So in the same Kenya, so a loan above like 50 euros is already considered like pretty big loan, right? But when we look at the grading of the specific borrower, so that's not what we touch. That's what we leave to the loan originator. Right. What we do, though, is actually we go in, we check that the loan originator understands what they do, that they understand how to credit score, how to underwrite, and how to credit score the borrower. And then basically what we do to help investors make kind of judgment, because there's a lot of kind of loan originators, we assign a Mintos rating to the loan originator, which shows then how good the quality loans they can originate, how kind of financially stable they are, and like in general position in the marketplace. So that's what we do. So based on supply side, we much more look at the kind of a loan originator as a whole instead of like a specific loan, which is originated by them.
Okay. And then, so I imagine you've got these 70 plus originators. What are the different verticals that you're operating? Obviously, you've got consumer, but maybe just run us through the different types of lenders that are coming.
Basically, you can think of it as long as it's a loan, it can be funded on the marketplace. So we have everything from very short-term consumer loans, installment-based consumer loans which are basically car loans backed by the car, mortgage loans which are basically real estate where it's pledged. Then we have on the small business loans, invoice financing. We do have agricultural loans. We do have VAT loans actually. So as long as it's a loan, it can be funded on the marketplace. And that's what I guess we bring to the table, is that as an investor, I can come to the Mintos. I see like super diversified loan offering, and I can pick and choose subject to my preference what I feel I would want to invest in. And we facilitate 10 different currencies. So also investors can come and invest in different currencies. So
right.
That's also what is the kind of basically value of building one marketplace for many different loans.
Right. Yeah, that's interesting. So I noticed, just to share with the listeners, I actually invested, and I used your auto invest tool, and I think within like 2 days. It was all invested, and it was across, I think, like 35 originators. And I only did 2,500, which was like 2,200 and something euros. But I was in well over 100 loans.
Yeah, investors can start small, so the minimum they can invest, they are investing in fractions of loans.
Right.
So the minimum they can invest is 10 euro or equivalent in any other currency, which means that even if it's a few hundreds or few thousands of euros, you can build an already pretty diversified portfolio. Yeah. And the tools like Auto Invest or Invest in Excess, which is even easier tool, allows you to build a diversified portfolio pretty easily, so you don't have to go and pick and choose yourself manually.
Right. So let's talk about the investors, and maybe you could give us a little bit of a profile. Who are the typical investors that is coming to Mintos? Mm-hmm.
So when you say typical, so perhaps you are at the stage when like typical is not a good way to look at it because it's very diverse.
Yeah.
But still, if you look at the typical, I would say it's all of them are retail investors. We have only a very few kind of which we might call institutional investors, but they are very small. So we focus on retail investors. Right. So your retail investor is going to be anybody who is investing just starting to invest. They're investing like few tens of euros, up to people who are investing like a couple of millions of euros through Mintos. On average, investors have invested outstanding is about like 5,000 euros, which is invested through us. Okay. They're going to be your people in very late 20s, early 30s, up to like mid 40s, maybe 50s. Basically, your digitally savvy people, which are starting to accumulate the capital and which are kind of comfortable with managing wealth digitally. So that's basically what we see our client. In total, we have today 190,000 retail investors, still growing around like 8-10% month over month. So I would say that it's only now kind of starting that we are really opening up the asset class to retail investors.
Right. And so, and as far as geography, I mean, obviously, I'm based in the US and I was able to invest. Tell us, where in the world can you invest?
It's predominantly these days it's from Europe. So because also the loan supply is in euros, we accept also investors from other countries, but then it depends where they have the kind of bank account in. So also from the US we can accept. But
do you have many US investors?
We are not focusing on the US because there's no US kind of denominated loans. Yeah.
Right.
So we're not focusing on.
Yeah, fair enough. And it doesn't sound like you need to, given the volume. So we just heard earlier today someone talk about the cost of acquiring investors, retail investors here in the UK was quite cost prohibitive. Mm-hmm. And so you see a lot of them have moved away from retail and doing more institutional. Now you have stayed with retail and you've built a sizable business. What I'm really curious about is when you got started, mm-hmm. and you seem like you went over this hump where suddenly that you started to take off like a rocket ship. When you got started, I presume you were advertising for investors. Like, tell us how you've acquired investors and how that's evolved.
It actually initially was the other way around. So initially we did most of the investors came through word of mouth, either through referrals or through affiliate networks and so forth. So word of mouth was a big driver. And only in the last, I would say, like 6 months or so, we have actually started to invest in investor acquisition. And I think actually back to your point about like typical, the good question, what is typical like P2P platform these days, but they definitely shifted from retail to institutional. But the problem was because the originations were growing faster than actually they could acquire retail investors. Yeah. But that's how we solved that is actually today, basically the problem was that it was very hard to get kind of to a decent amount of retail investors. Like so that there would be sufficient retail investors so that you can actually fund a lot of volume. And that's what we have solved today is basically any loan originator which connects to Mintos, they get access to 190,000 investors from day one. Right. So you basically get like instant liquidity from day one. And that was kind of, I think, the problem for other players that they actually could not scale up the retail investor side as fast as they were actually originating. Having said that, I still think that retail is like fantastic. Retail investors is definitely fantastic kind of funding source, and that's what we see loan originators very much valuing today, that they actually can connect to us and they get access to 190,000 investors from day one.
So you could almost become like the de facto retail arm for all these platforms.
And that's a very fair point. So what I see is that most of the loan originators build very diversified funding sources, right? They have like the warehouse lines, they have the whatever direct funds investing. Somebody maybe have a public fund or like directly to institutionals, and they also want to have a retail investors. But for them to build the retail investors side themselves as a platform, actually, in most of the cases, it doesn't make sense. And that was also the initial idea of Mintos, that if you look at the loan originator side, it doesn't make sense that you have your different platforms competing for the same investors and trying to get them on the platform. And then as an investor, I have to go and actually on one platform, other, and like many different platforms, and it's kind of repeating the same things, which doesn't make sense. So much better just come to one marketplace, see all the same loan originators, and invest through one kind of gateway.
Right. So how do you balance out the platform? It's like any of the peer-to-peer companies. You've got you've got your supply of investors, investor capital. You've got your borrowers, and you have a bit more control over it because you're not just relying on one source of borrowers, but still. I mean, do you find, like, what do you have an excess of? Is there excess investor money looking for capital? Is every loan funded, or are some of the loans not getting funded? How's the balance?
I would say today, actually, we much rather would call us a marketplace for investments in loans, because we technically are not lending, and we are not P2P lender in that sense. So it's like marketplace for investments in loans. But it's still the same dynamics what you described. So there's investor demand and loan supply, and as a two-sided marketplace, it's never in balance. Like today, if you would have asked like 3 months ago, I would say we lacked investor side. Like there was kind of investor demand was behind, but today it's actually there's loan supply is lagging behind. So it's never in balance. So it's all the time kind of balancing act. But the good thing is that all the loans which come on the Mintos marketplace, they are pre-funded by the loan originators. They actually have issued the loan already to the borrower. So for them, it's actually, they have other funding sources as well. If it doesn't work on Mintos, they can fund it through their own balance sheet themselves. So they are not kind of constrained on that side. But most of the loans these days, actually, when they come on the Mintos, today for sure, because the loan supply is lagging behind, they're going to be funded instantly through the same auto invest or invest in excess product. And most of investors actually, I think about 80% of loans get funded through auto invest, which means that once it appears in the marketplace, it gets funded like straight away. Right.
So do these platforms have to have like an API connection capability? So I mean, imagine some of these platforms are offline, right? And they wouldn't have the capability to directly connect with you. Do you work with them to be able to build an API connection? How does it work?
So we have API connection to all of them. So it works only through API connections because of the volume. So
you couldn't do it
there's
any
no
other
other way.
Yeah.
Having them being offline actually doesn't mean that they don't have like back office very digitally kind of developed. So maybe they have offline operations where they acquire borrowers in offline way, like the same Oriente which was on the stage just now. Basically, they have most of the borrower acquisition offline, but as a backend, is still everything is online, right? So everything is actually in the system. So we just need the API connection to the system. Once the loan is originated, so the borrower goes to the same Oriente, for instance. They take the loan. At that moment, that appears on the system. Through API, it's sent to Mintos marketplace, and then it appears for investors to invest in, and they can invest through automated tools. And basically, that in many cases can happen. That say you sit in your home with a few clicks, you have set up your auto invest, and when the loan is originated, it actually get funded like immediately.
Right. So then, what about the interest rates of these loans? And and maybe you could talk about the interest rates of the loans. And I know it's going to vary. Mm-hmm. Like a short-term invoice financing loan is going to be different from a property-backed 3-year loan or 10-year loan or whatever. So tell us about the range and then and the typical returns or the average returns maybe on the platform.
Mm-hmm. Average return so far has been around 11% per annum net for investors in euro terms. In other currencies, it could be higher. And then when we look at the kind of what borrowers are paying in interest rates, that's exactly what you say. It's going to be wide range. So there's going to be from very low or rather high single digits with a very low default risk up to, for very short-term loans, it could be like much higher interest rate what the borrowers are paying. So it really depends on the loan product, and because we provide so diverse offerings, so there's no like good average which we could use. So it depends on the product, country, loan originator, borrower segment, and loan type. So
right. So then how do you guys make money? Do you make it on both sides? Do you take a fee for the platform and a fee from the investor, or how do you make money?
we take a fee from the platform, and then we don't charge anything to investors. Then, but on top, we provide some services. So, for instance, currency exchange. So there we're going to charge some fees as well. But the main kind of revenue is from the fees to the platform for using the marketplace.
Right. Okay. So then, I remember you spoke here last year, and you talked about adding a debit card and a bank account. Did that come to fruition in the last year, or where are you at with that?
It's still in progress. So basically, it takes time to get the necessary licenses and permissions. And these days, when the fintech is fairly kind of up and coming and growing, so obviously regulators also have a lot of work on their table. So basically, it just takes time for the regulators to look through the application. So as soon as we get the necessary permissions, we will be ready to launch both bank account for European-based investors and also Mintos card for investors.
And then what about the UK? I read somewhere that you were applying to get authorized in the UK. Is that where you at on that journey?
So the UK for us is just another market. So that's one of the markets which we definitely see there's a potential. We actually applied for the necessary permissions already very early in our journey in 2016. It took a while to actually FCA to review that. But at this moment, basically, at that moment, we perhaps were a bit too early in our kind of efforts establishing a real kind of international kind of operations. So the FCA kind of deemed that we don't have like enough resources and basically said to come back later, right? At this moment, if you ask me, so we have a lot of opportunities on the table. Would I say that the UK is the best market to kind of focus on? There's a lot of uncertainty out there.
Right.
Both the FCA,
give it a year or so.
Both the FCA, the Brexit and all that. So we keep our eyes open, and we definitely have the UK on our agenda, but it's most likely not immediate in the immediate future.
Right, fair. So then, I'm curious about where you are on the journey, on the profit journey. Are you making profits yet, or whereabouts are you on?
We actually are. So, and that's what I say. It's been competitive advantage being based out of Latvia. So we've actually been profitable since early 2017.
Oh wow!
Even with all the growth we have experienced. So now maybe we are now kind of burning cash because we are kind of adding more people and expanding much more aggressively in geographies. But we've been slightly profitable for the last few years and remain slightly profitable on the monthly basis.
Okay. So we're almost out of time, but I'm curious. I mean, you've got this amazing platform right now that feels like, it's already. When I see the list on Klaus's, p2pbanking.com, and you're always by far the largest. In fact, you could add up every single other platform on there, and it wouldn't come up close to what your total is each month. So where do you take this? What's the? I mean, do you want to be the sort of the world's kind of, the way the world invests in lending? I mean, or are you focusing just on building what you're already doing? I feel like you've got this incredible opportunity in front of you, and I'd love to know where you want to take it.
I think our vision really is to open up the new asset class and really open investments in loans. Basically, loans as an investment for retail investors. So basically, at the end of the day, so that when people think where to invest, they can think, I can invest in stocks, I can invest in real estate, commodities, I don't know, maybe somebody endeavors in crypto or somewhere else, and then they think, well, I also can invest in loans. And so that retail investors actually have this opportunity on the table. So that's what we are working towards. The market is huge, right? We are not only limited by alternative lending companies originating the loans. So already today, while we are still and going to focus for the immediate future on alternative lending space, there's a lot of things happening. Already today, we have been talking with, for instance, telecom companies. Like telecom companies in Africa or in Pakistan, they are one of the biggest originators of loans because they are the ones which have data and which can actually credit score the borrower one way or the other. So that's like clear originator as well for us. The same e-commerce companies, like e-commerce platforms, they are giving loans to their merchants on the e-commerce side, and they also don't want to keep the loans themselves on the balance sheet, right? So for them, we also can serve as a kind of way to offload the loans and basically fund the loans. Or the same banks actually. So there's plenty of banks which don't want to keep the same small business loans on their balance sheet because they have to manage capital ratios and so forth. They might want to offload them through the marketplace and sell to retail investors. So basically what I see us actually becoming is a place where retail investors can come and pick and choose from many different loans, be it originated by alternative lending company or down the road by some other players, and become this basically marketplace for investments in loans globally.
Right. One more question I forgot to ask you earlier. What about how are you regulated? I mean, is that so? I imagine that's a very important thing for the investors want to feel like their money is safe. Well, tell us how you're regulated.
So regulation is like twofold. So we have to look at the side of loan origination. So basically each and every loan originator, they have their own permissions and licenses in the respective country they operate in.
Right.
So that's where the regulation comes in there. And then on the other side, so it depends on the market we are operating or we are kind of working in. And in most of the countries, actually in Europe, I would say still the regulators are kind of forming their approach. It's still there's no kind of homogeneous approach to how to regulate that. So today we are based out of Latvia, that's where we are operating from. So our service is not considered a regulated service, basically because what we do, we facilitate assignment of loan receivables from loan originator to investor. So it's not deemed a regulated service today. Having said that, that's definitely going to change, and we are pushing for that to change.
Right.
And meanwhile, we are also applying for electronic money institution license and investment brokerage license, just to have additional kind of certainty there. So it's still kind of work in progress, I think, when it comes to kind of regulating.
Okay, so finally then, last question. How many people across the different offices you have, like what's the total workforce size?
Today we are about 150 people. Okay. We've been scaling quite a bit, so we started the year with 60 people.
Wow.
Now we are 150. We most likely going to end up the year with like 200, 220 people. And I think it's only now like the scaling part is starting for us.
Right. Well, you've created an amazing organization that is. It's been fascinating to watch how you guys have grown, and all the best. Thank you very much for coming on the show.
Thank you, Peter.
Okay. See ya.